Have you ever just stared at your screen right at the market open and felt completely overwhelmed by the chaos? Well, you're definitely not alone. But what if there was a way to actually decode that chaos? Today, we are going to break down one single really powerful trading strategy that's designed for exactly that. The wild first 15 minutes of the day. All right, let's get into it.
And this is such a powerful idea, right? It suggests that all that craziness at the open isn't just random noise. It's actually a signal. The answer we're all looking for is often hiding in plain sight, right there in that very first candle, if we just know how to read it.
So here's the game plan for this explainer. We're going to start with the secret of the open, then dig into the manipulation play that drives these moves. After that, I'll introduce you to the pattern scalp strategy itself, walk you through it step by step with real examples, and then we'll see how this whole thing applies even beyond the opening bell.
Okay, let's dive right into the secret of the open. It's a time of day that most traders, honestly, they fear it, and for good reason. But what if that fear is a little misplaced? What if the most dangerous time of day is actually the most profitable? And yeah, this is where so many people just get, well, ripped to shreds. That first blast of volume, the price swinging all over the place, it can be incredibly tough to handle. If you don't have a solid plan, it is so easy to get caught on the wrong side of a move that happens in seconds. And that's the promise we're going to explore today. What if you had a playbook for that chaos? The pattern scalp strategy is designed to do exactly that, to take that initial wild volatility and turn it into a predictable and, most importantly, an actionable trading setup. So before we can even use this strategy, we've got to understand what we're actually looking for. We need to understand the why behind these crazy price moves. This part is absolutely critical before we get to the how.
At the very heart of this thing is what we call a manipulation candle. You might have also heard it called a liquidity sweep or a stop run. Basically, it's a sudden, super aggressive move designed to trick retail traders into chasing the price, right? This creates a huge surge in volume, which is exactly what large institutions need to get in or out of their massive positions without wrecking their own price.
And this quote from Dr. David Paul just nails it. This isn't some shady conspiracy theory, it's just market mechanics. For a giant fund to buy 1 million shares, somebody has to be selling 1 million shares. So these aggressive moves, they engineer that liquidity. They trigger everyone's stop losses and they lure in all the breakout traders. Our strategy? We let them do it, and then we trade the reversal.
All right, so now that we get the why, let's talk about the how. It's time to formally introduce the strategy. It's called the pattern scalp, and it is a simple 3-part playbook for trading the open. And the best part? It is ridiculously simple. Just 3 steps. That's it. First, we define the opening range. Second, we confirm the manipulation. And third, we find our perfect entry. Let's break down each of these steps. Okay, enough theory. Let's get our hands dirty and see how this actually works in the real world. We're going to walk through a couple of fantastic examples from Meta and Apple to show you exactly how to execute this. Step 1. Super easy. This is purely mechanical. You pull up a 15-minute chart of whatever stock you're watching. Then, you just wait. You do nothing until that first 15-minute candle is fully formed and closed. Once it's done, you mark its high and its low. That box you just drew, that's your entire world for this trade. All right, step 2. This is where we put on our detective hats. We need to figure out if that big opening move was for real or if it was in fact manipulation. And we do that with a little math, using a tool called the average true range, or ATR. It's just an indicator that tells us how much a stock normally moves, giving us a baseline for what's normal. Okay, so let's use Meta as our guinea pig here. First, we flip over to a daily chart to find its ATR. And in this case, boom, Meta's daily ATR is about $16. So what does that mean? It means on an average day, Meta moves about $16 from its high to its low. Now here is the magic number. This is the key. We take that $16 daily ATR and we find 20% of it. That gives us a manipulation threshold of $3.20. Think of this as our manipulation alarm. If our opening 15-minute candle has a range bigger than this number, the alarm bells should be going off in your head. And would you look at this? Our threshold, our little alarm, was set at just over $3. But the actual range of Meta's first 15-minute candle was $15. That is insane. It consumed almost 90% of its entire expected daily move in the first 15 minutes. This isn't just a strong open. This is an extreme event and a classic, textbook sign of manipulation.
So, the trap has been set. The manipulation is confirmed. Now for the hardest part of the whole strategy. Step 3. We have to be patient. We drop down to a smaller time frame, say a 5-minute chart, and we just wait. We need a very specific signal that tells us the reversal is on. We don't just jump in.
And we're looking for one of two very specific, very cool sounding signals. First up is the John Wick. This is a hammer candle. Why John Wick? Because that long wick looks like a weapon, right? It tells us price got shoved hard in one direction and then was violently rejected. The second signal is the power of tower. This is an engulfing candle. It's so big and powerful, it just completely swallows the candle before it, showing a massive, towering shift in who's in control.
So let's tie it all together. You can see how this plays out both ways, right? For Meta, we had that huge downward spike, way bigger than our 20% ATR threshold. We waited, got a power of tower entry signal, and boom, price reversed all the way back to the top of the range. For Apple, it was the mirror image, a crazy spike up, a power of tower to the downside, and a beautiful reversal right back to the bottom.
So you might be thinking, this is great, but does it only work right at the open? And that's a great question. Because a truly great strategy has to be flexible, it has to be adaptable.
And the answer is absolutely not. And this is so important. Sometimes the entry signal doesn't pop up for 20 or 30 minutes. That's fine. The setup is still valid. In fact, the core principles, spotting an extreme 15-minute move and waiting for a reversal candle, can be used any time of day.
Check this out. Here's AMD. The market's been open for an hour and a half. It's kind of sleepy. And then, bam, out of nowhere, you get this monster 15-minute spike that consumes over 100% of the stock's entire average daily range. The playbook is exactly the same. That move triggers our alert, we wait for our signal, and in this case, a perfect John Wick candle showed up, followed by a full reversal.
And that's the big takeaway here, folks. Manipulation is manipulation. It doesn't care what time it is. The pattern is the pattern. The playbook is the playbook. Whether it happens at 9:30 a.m. or 11 a.m., it doesn't matter. The rules are exactly the same.
So I'll just leave you with this question. Now that you know the playbook, now that you can see the strings being pulled, are you ever going to look at that opening bell chaos the same way again? Because what once looked like just random noise might just start to look like a repeatable opportunity.